This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, everybody? Happy Thursday. Welcome back to another episode of Benzinga Live. And we've got a packed show today. A lot to talk about after some monster earnings reports last night coming from Netflix and Tesla. Both, failing to really wow investors, even if the reports were okay. Tesla trading down about 7% today. Netflix getting hammered as well, down 9%. All in all, it's a rarity in 2023, seeing the market down, seeing the tech market, the Q specifically down. But all in all, the Q is down only about 1.3%. I'm sure a lot of people, if you told them that Netflix would be trading down 9% and Tesla would be trading down 7%, both major components of the NASDAQ 100, that they would have thought that maybe the Qs would be trading down even more than 1%. SPY not having a terrible day, down 0.2%. So if you're not weighted heavily into the tech market, it seems like your portfolio is probably not getting absolutely crushed today. So we're going to bring on my man, Steve Kalyjian, here in a minute, see his takes on the market, see what he thinks about these earnings reports coming out and where the market is heading. And then after that, we'll be talking to downtown Nick Brown about, some of the top headlines on Wall Street. We'll break down, go through the numbers of these earnings reports and kind of what investors are seeing about them, as well as other top headlines on the street today. So without further ado, let's go ahead and play our special guest intro and get Mr. Steve Kalyjian on the show. Mr. Steve, how you doing today?
Hey, Aaron. Good morning, good afternoon, everybody.
Good afternoon. It is. It's usually you're coming on right before noon, but this time it's slightly after. Sorry about the delay in today's show. But Steve, tell me what you're seeing today. A lot of these big tech names down today. You've got Amazon down, Netflix, Tesla, all these big names down. Do you think this could be the sign of a market top, or is it just kind of a little sell-off?
Well, you're seeing the rotation out of tech. You're seeing Netflix down 43. Tesla was around the 270 level, bounced about 2 or 3 here. It's the herd mentality. Everybody's in the same names, and Goldman's pushing up here above 350. Boeing's pushing up to new highs on the day. So the Dow's trying to catch up on some of these names. Overall, I got a pretty significant buy on the monthly chart on my work. So that means that technically, I would say
monthly on Dow or SPY or what?
On the S&Ps, the spiders.
Pull that up.
So I, excuse me, and on the NASDAQ. So I'm probably would say with pure confidence that 90% of that the lows are in for the year, 95% of the lows are in for the year. And if we do get any pullbacks, I think the S&Ps will. I change my view here a bit because of this AI insane nonsense, that the S&Ps will probably hold above the 3,900 level, 4,000 if we get some type of pullback late summer, early October time period, and then a push up that potentially could push the S&Ps above the 4,800 level. So again, I think we'll make higher lows here, but that's not to rule out that I'm a gap guy. And I don't trade off of that, but I trade off of extreme overbought and oversold conditions. And you have gaps. They're going back just on the Qs, I believe 274 level. I'm not saying they're going to get filled this time here. The Nasdaq's up over 35%. The S&Ps are up about 19% for the 17% for the year, 18%. And this is parabolic here if you look at this chart. And you're going to get a pullback of some magnitude that's going to make a higher low somewhere in this box here that I'm pointing. I don't know if you can see my pointer or not, but so right now I wouldn't be long with your money here. So I think there's a lot of risk to the downside. I think people are complacent. Somebody, good friend of mine, sent me an index report that this ratio is the lowest it's ever been. On Bloomberg, it was a put-call ratio on out-of-the-money puts, and it's the lowest it's ever been in the history. So remember, we go back to your sentiment index. I'm dying to see what that is, bulls versus bears.
Yep.
And I mean, can you imagine back in March or April, when we were talking, the video was 123. It's trading 470, 463 now. The high was like 480.40.
I mean, there are a lot of. I mean, Meta is up 3 times from its lows. There are a lot. Heck, Carvana is up 10 times from its lows. There are a lot of stocks, and Nvidia is one of those.
It's just insane. I was buying. I think it was either Google or Meta I bought, and I just kicked it out for a trade in and out. But I mean, they were 93, 95, and you thought they were going to zero, and then look at Meta hit 318 yesterday, and they're getting hit here today. But these are parabolic moves here. And normally, if you're anyone that's been in the industry for as long as I've been, these moves don't last. These moves correct pretty substantially. So if you have significant gains in these things, don't be foolish. I would look to probably sell these and look for some oversold conditions on the bigger time frames like the weeklies. But I don't know. This reminds me of what I saw back in the heyday of the late 90s almost.
Wow. I have a good question for you, Steve, because this came up in conversation yesterday. What if you were to won that Powerball lottery? Okay, say you weren't gonna just invest all of it right away, but say you were gonna take 100. Like, what would you even do with that size of money in terms of trading? Like, because like some people were saying, oh, I would just take the 4% and buy T-bills. That's $4 million if you had 100 million.
I would take the 5% and buy a 5-year CD. Are you crazy? You got CDs right now averaging about 5.2, 5.05 or 5.15.
And so that would be essentially risk free for 5 years. You get 5% return.
If you won that Powerball, what do I need to do anything for? Maybe I take, what was it, 900 million?
Yeah, but say you get, if you take the lump sum, then it goes down to like 600 after taxes. Say you're taking away like 350, 400. Still a lot of money.
So let's say 350. I would take 50 million and short the market and put 300 million in a 5% CD.
There you go. But so what? I mean,
$15 million a year on interest, taxable, and I'll short the market, and I hope the market would pull back about 400 S&P handles, then reverse to go long.
Yeah, I mean that'd be a good way to trade with that. I was saying too, like even if you just bought a bunch of shares of the S&P 500, whatever, like the dividend, you get, if it stays steady, you get the dividend. If it goes up, then you make money off that. If it goes down, you could always. No, not right here. But I'm saying you could always, if you did want to do it that way.
You take the 50 million that you would probably trade if this was fantasy land. Like it's good to have that every so often, And then I would probably wait for a pullback and buy, $50 million when I thought it was right, or 25 million and 25 million of the Qs, because I think that's the one to play.
Yeah, I think it's interesting because I think with that amount of money, like your trading strategies would be different than if you've got, a few 100,000 in a trading account or whatever, just because it's so much that you don't need that much of returns. Any 3, 4, 5%, you're still talking about multi-millions of dollars of profit that year,
Well, I mean, first of all, if you bought 1 million Qs, that's $383 million. When I'd rather buy 1.5 million TQs, right? So, which are trading around 40, so maybe 40, what is it, 45? So maybe I would buy like, if they got down there, 500,000, 250,000 here, 250,000 here, 250,000 here, 250,000 here, right? And then, build a position of 1 million shares on that, 250,000 shares, 250,000 shares all the way down. Build up 1 million share position, and then see if it runs, 10 or 15 points, and then get the hell out.
Yeah, I think there's a lot of different ways. It's just an interesting kind of hypothetical to think about.
You can't negate taking 5% on a JP Morgan, 505 5-year CD. Yes, it could be called at any time after a year, right? But who cares? You made $15 million on your money, gross, without taxable.
Yep. All right. Well, any individual names? I know you mentioned Boeing making new highs of the day. Steve, any other individual names that you've been been watching?
Right now, I'm bearish on the market here. I think that this run up here needs to correct and back and fill. And I think you're going to make lower highs. And ultimately, I think the bottom is going to come sometime in October. And then you're going to get your so-called year-end rally that could potentially push them up to new highs. I mean, I'm dumbfounded at this move, really. I mean, I've seen it all. I mean, I've seen a negative 40 oil. I've seen a S&P down, a Dow down 3,000. I mean, I've seen it all. The crash of 87, the long-term capital debacle, I mean, this is just completely, this is like, AI has been around for years. And now all of a sudden, all of a sudden this caught fire. It's like, and this to me reminds me of the .com type thing. You just threw a dart and you made money most days.
Yeah, I mean, it's been just an incredible rally. I think a lot of people with the higher interest rates, and now, of course, potentially even going to stay higher for longer, just has people shocked that the market is continuing to go up. But that's
I think somebody said today that they're looking to raise quarter of a point. They're looking to raise a quarter of a point.
Yeah, I think that's what what it looks like is set to happen, at least according to the CME Watch tool.
But really, if you look at this, inflation really hasn't come down that much, though. Gas prices still high. They take out rent and energy. So, this is moronic. It's like they tap the numbers to the way they want it to skew. You know what I'm saying?
Yeah, I mean, I think in some regards, right, inflation has dropped, and you do have strong labor data. So I think there's some things that show why the market is up a lot. But I think it's here where we're at now. I would agree with you that I probably wouldn't be a buyer here, like depending on time frame. Like if you ask me, gun to my head, a month, say maybe a couple points lower, and then but I don't necessarily think we're gonna see some big crash, some 10-20% drawdown. No, maybe it's just a few percent, maybe 5 to 8 to 10%, and then from there, back up, just depending on what
10%
type of
on the S&Ps is 400 plus points, which brings it about 18, about 3,000 points on the Dow, down to 32,000.
Let's see. Yeah, I mean, 10% on the SPY would be significant. That'd be about $45 lower from here. So we're looking at where we are right here on the chart. But
so it'll be about 4,000, like I said.
Yeah. And yeah, I mean, we'll see. But I don't. I wouldn't necessarily be buying if I was looking for a swing trade going long right here. But overall, I'm definitely not bearish. I'd say I'm just kind of neutral in the short term, more leaning bullish in the long term.
Yeah, I agree. I mean, look at that chart there. I think you're gonna pull back here and make a higher low. So if you draw your trend line from the bottom of right here and to the bottom to here, right there, what does that bring you down to?
This would bring us down to, let's see, about 4,100, in between 41 and 4,200.
That's doable. 40, 50, 4,100.
Yeah, I like that. I think that's definitely something that we could see, and then from
the
there,
next move up would probably push them up to new highs.
Yeah. Yeah. All right, Steve. Well, thanks for hopping on today. It's always good to hear your thoughts on the market. Again, it's rare to see a red day in 2023, so we'll see if this lasts.
It's not over yet.
That's true. I mean, we could definitely turn green. I mean, it is green on the Dow and on. I mean, is SPY green right now? SPY is slightly red. It's really just the major tech stocks that are getting kind of hammered today. Your Amazons, your obviously Netflix and Tesla. So, all right, Steve. Well, enjoy the rest of your day. Have a good weekend, man, and we'll chat next week.
Take care, Aaron. Bye, everyone.
You too. All right, guys. That was Mr. Steve Kalyjian. What is up, Jesse? Lunchtime. How you doing, Nick? Ready to hop on? All right. Let's go. go ahead and give Mr. Downtown Nick Brown our very special Zinger Nation welcome. We come back, we'll be going through some of the top headlines on Wall Street today. What is up, Nick? How you doing?
I'm good. How are you?
Pretty solid. Where do you want to start? What headline? I'll toss it up to you.
I was gonna say we could start with Netflix. That's the talk of the town. We'll go from Netflix to Tesla, then to United Airlines. Just to make an interesting point, Aaron, it looks like casino and airlines are doing great, and video games and electronics are more of the challenging environment. So that's kind of like the sectors or performance stocks that we're watching or that I'm watching. It's like casinos. Las Vegas Sands reported last night. They're doing great. United Airlines, American Airlines doing great. But it's the video games, electronics, semiconductor names that aren't doing that hot right now.
I saw a stat the other day. Granted, when I say stat, this is just something I saw on Twitter. So someone out there in the audience, please fact check this. Or Nick, please. I saw somewhere that Rockstar game is spending $2 billion on GTA 6. Well, I can Google this real quick. How much is GTA 6 cost?
Well, there is a report out that says that from, I believe, well, I've never heard of this source, but when I Google that, it says Rockstar Games reportedly spending $2 billion on GTA 6.
So, I mean, I don't know. I'm not a video game expert, but if they're spending $2 billion on GTA 6, that's a lot of in-game purchases to be made, because I don't think it's clearing $2 billion just in terms of sales of the game. But I mean, I don't know. Either way, Take-Two is actually slightly up today. So if that news came out or is coming out about how much that's costing, clearly investors aren't too worried about it. At least, if I'm an investor in Take-Two, which I guess I technically am through index funds, that at least I'm just excited the fact that the game's coming out, because this has been 10, 12, 13 years, and you were probably in diapers when the last Grand Theft Auto came out.
Yes, that is very factual. I was.
Okay, so let me check. Let's see when GTA 5 came out. GTA 5 came out in 2013, so 10 years ago.
Oh, I wasn't that little.
Okay, you weren't that little, but you certainly weren't old enough to play the game. Let's put it that way.
But even when I did a few years ago, I never played GTA, or I never really got into video games. I normally stuck to NBA 2K. I was one of the basketball people.
Well, same company. I mean, Take-Two has Rockstar and 2K. Those are its two biggest game lines. So, I mean, my thing with Grand Theft Auto is it's a huge franchise, obviously, and when the game comes out, millions of people are going to go buy it for 70, 80, it might even be 80, but I don't know. I mean, they could charge. I don't know. People will be pissed, but I could see them charging definitely more than the standard $60 or $70, whatever it is now for a game. But what's been very impressive about Grand Theft Auto is that even 10 years after the game came out in 2013. It's still one of the most streamed games on Twitch. People still spend a bunch of money online in the game. I don't know exactly, because I've never actually gotten into the live online GTA universe. So I don't know exactly what people are spending money on. I guess skins and cars and whatnot. But either way, I mean, it's clearly got staying power. So the next one's set to bring in lots and lots of money whenever they are able to put it out.
Yeah, I was going to say, Aaron, if you could throw up a chart of Apple, we are getting some news out of The Information. There was a report that just crossed minutes ago saying Apple is struggling with manufacturing larger screen for iPhone 15s. There's two people direct knowledge with the issue telling The Information, basically saying that there could be a shortage of units at launch in September. This news literally just crossing minutes ago, and it says Apple suppliers are using a new manufacturing process for the two models, the most expensive of the upcoming series of iPhones. That will allow it to dramatically narrow the width of the display's black border, known as the bezel or the bezel, however you say it. But then this will allow the iPhone 15 Pros to slightly have a larger screen when compared with previous models. So I just wanted to bring that up. Apple stock is lower. That comes on the heels of, as we saw yesterday, there was a report out from Bloomberg saying Apple is coming with their own area of Apple ChatGPT. There was a report that had that spiked, and I don't know if you could see that on the intraday chart yesterday. They're testing their own ChatGPT, but it's called Apple GPT, and it's to catch OpenAI. And the company is building. This is according to the Bloomberg report that the company is building larger language models and an internal chatbot. The executives haven't decided how to release tools to consumers, but the most important line in that report basically was, quote, Apple employees say the company's tools simply replicates Baird, ChatGPT, and Binge AI, and doesn't include any novel features or technology. So basically, it's just going to be a plain old system. It's really not going to be anything fancy as everybody's making it out to be.
Yeah. Well, the one thing with Apple, I think, is that, so you can see here on the chart, we did dip lower, came back up a little. So it went from like 195.60 cents to 190. So it dropped almost $1. So that is pretty, about 0.5%, but it's starting to come back a little bit. You can see the spike yesterday here. We're looking at the 2-minute chart. This was on that news, the AI that you're talking about. I wouldn't, as an Apple investor, I wouldn't be too concerned about this manufacturing issue, because, like, think about it this way: when the phones come out in November ahead of the holidays, if they're like more exclusive, like, I don't think that's a bad thing. If it's like very hard to get your hands on an iPhone Pro 15 Max, that might make people want that more expensive model more, and then over the next like following months, as they're able to ramp up production, people go out and buy that one. I mean, it's just, to me, like, these things with Apple where, okay, they might have like a slight manufacturing issue, then the stock goes down 1%, or say it even goes down 2 or 3%. Like, it's Apple at the end of the day. Like, what are they going to do? They're going to make and sell iPhones. They're going to make and sell a lot of them. They're going to make and sell computers. They're going to sell watches, AirPods, and make a lot of money. That's just what Apple does. So because they run into some like slight hiccups here and there, it's going to take a lot more for me as an Apple investor to become concerned.
But the point I'm trying to make is, whenever a company releases a new AI tool, the stock shouldn't, like, these short-term investors, and you shouldn't just be making it spike. Like, there's no reason why, just because you mentioned AI, Apple should have spiked, I don't know, $3, $4, $5 in a matter of minutes. And then look, you saw it eventually come back down. It's to the point where no matter where you mention AI, and if you mention AI, people start going crazy. AI is going to be nothing but trouble. And we saw that with the start on Twitter. Whenever months ago, there was a report that, I think it was the Department of Justice or something with the Homeland Security, something in Washington, there was a picture with a burning building, and basically said, we have a burning building in Washington, something with the Department of Justice, or one of the major Department of buildings. And that turned out to be false, and it had the S&P drop 15 points in like 10 minutes. So my thing is, investors need and traders need to be careful, and really there should be something around AI. Once you mention AI, the stock shouldn't just start exploding. Like, come on now.
Well, I think just the other side of that is that, so if you look at Apple's chart over the past few months, or here, I'll go to a daily chart so we can see this. As Nvidia and everything else, started ripping at the beginning of the year, Apple has gone up with it.
Yes.
And Apple's been part of this AI rally, in part because investors just assume, okay, if this AI technology is as big as everyone is making it out to be, Apple, the biggest tech company in the world, the company with the most cash, isn't just going to sit there and let them. So there have been people throughout these past few months that have been buying Apple because of AI, whether or not Apple's like explicitly said anything about AI. So then when Apple does come out and give some color, give some more insight, I think it's fair that there's like a little bit of excitement surrounding the stock. It's it's going back to the 2-minute chart here. Obviously, like, it got a little jump and then sold off, and it ended up about a couple dollars higher from where it was. But it's not like the biggest company in the world ran up 10% and created trillions of dollars in market cap. No, I mean, I think it's like if Nick, it's like if some car company out there, doesn't have an EV line and they announced one today and the stock went up a few percentage points because it's like, yeah, I mean, that was probably expected that this car company was eventually going to get with the times and start producing an electric vehicle. So I don't know. I think it was fair in a sense that Apple stock got a little bit of a bump yesterday, just because it was the first time I think that it gave so much color on exactly what it's going to be doing with AI.
Yeah, I was going to say, even the New York Times had a report out about there was another company, and I think it was Google, maybe. Google is trying to create their own, and I know they have Baird, but the New York Times is using an internal chatbot. And so it's going to be very interesting to hear what the internal chatbot is and how it works, just because AI is really not going to take a lot off our hands, especially if it's not factually correct. There have been times ChatGPT is factually incorrect on a lot of items. It's very important for broadcasting. And so if you're using ChatGPT or OpenAI or whatever, that could literally cause legal troubles. If you're using AI to write your own news script and you come on it and without reviewing it, you come on and say that's factually incorrect, that could actually lead to legal troubles.
Yeah, 100%. I'm seeing JRP in the chat saying they're just keeping up, not innovating about Apple. So I think a couple things, to that, just to kind of play devil's advocate there. I would say that, people have been saying this about Apple for a long time. That's kind of been like the biggest criticism of Apple over the past, honestly, even like 10 years, is that like they've been putting out MacBooks and iPhones and they haven't really innovated that much. I mean, they've had the watch and AirPods, but I don't think necessarily, and this is as an Apple investor, like Apple does have the most cash on hand out of any company in the world. So they can spend a lot in R&D. AI, stuff like this, they're going to, be a player in it. But I don't think Apple necessarily, when you think about Apple in the Steve Jobs 80s, 90s days, they were the most innovative company in the world in a lot of ways. It's not the same company. Now it's the biggest company in the world, right? It got to where it is now as the biggest company in the world by being the most innovative company in the world. Now Apple's just like a cash machine. It just produces a bunch of these computers, a bunch of these phones, wherever my phone is, AirPods, whatever, and they sell a bunch of them all around the world. And they are like the biggest brand, probably. I mean, I think it's got to be up there with like Nike as the most recognized brands across the world. So I don't think it necessarily matters if, NVIDIA is working on semiconductor technology that Apple's not. I don't think Apple necessarily needs to. I think Apple can just continue to do what it does. And sure, like, I don't know. There probably are people right now working on very innovative things on smartphones and whatever, but like, it's not going to matter. They're not going to be able to take on the iPhone until someone does. And I'm not saying this like forever, but right now where it stands, I think Apple's moat is pretty solidified. And just because it might not be the most, innovative company in the world anymore, I don't think that necessarily makes it, a bad investment.
Right. But we're going to have to watch how the AI story turns out to be. But actually, let's go right into the earnings, just because I think they are topping the tape this morning, or I should say this afternoon. We can start off with Netflix. They reported yesterday afternoon. EPS came in at $3.29, better than the expectation of $2.85. Revenue $8.19 billion. Estimate was for $8.3 billion. So they did miss there just a tad bit. They did issue some guidance. They see Q3 EPS of $3.52. The estimate was for $3.23. They see Q3 revenue $8.52 billion, just a tad bit below the expectation of $8.67 billion. They still see full year operating margin of 18% to 20%. Estimate was for 19%. Rolling out paid sharing to almost all countries as of yesterday. They says they were doing that so yesterday, but I have it as today just because of when I wrote this headline or when I got the headline off them. So they actually rolled out to paid sharing to all countries yesterday, and they added 5.9 million subscribers in the quarter. Now, they did decline on the earnings call to give specific information on the rollout of its paid sharing initiative so far, but co-CEO Greg Peters said Wednesday that the company will not see the full effect of the policy for several quarters. Of course, it's going to be a lagged effect. And co-CEO Ted Sarandos said Netflix looked at opportunities to buy intellectual property and build its content library. And he said on the call, quote, our M&A activity would mostly be around IP that we could develop into great content for members. Traditionally, we've been very strong builders over buyers, and that hasn't changed. And now looking at what the research firms are doing, so what are they doing with their targets? Deutsche Bank goes to 485 with their price targets from 475. Piper Sandler goes to 440 from 350. Wolf Research goes to 500 from 485. Pivotal goes to 600 from 535. B of A goes to 525 from 490. Rosenblatt goes to 458 from 400. Wedbush goes to 525 from 475, and Canaccord Genuity they go to 525 from 470. It is interesting to hear Credit Suisse they maintain their target of 370, and Morgan Stanley they maintain their 450 target. Overall, the quarter was great. Conference call was great. They gave guidance, what everybody wanted to hear. It's just the stock has been up so much. I believe it's up 70, 80, 90% year to date. So eventually you are going to get some selling as it did the run up into earnings. It's down today. I don't think it's anything to make of, but we'll see what comes in the next few days and few weeks to come. But it has run up significantly into earnings. So this pullback is nothing expected. Was expected in some sort. Implied volatility, a one-day move. There was some lists out yesterday for Netflix. It was about an 8.21% plus or negative move. So we are kind of in that area.
Yeah, and it's interesting that on obviously this report that kind of failed to really impress investors, that the stock isn't down. I mean, you've seen these past Netflix reports where the stocks went down 20%, 35% one day, April 2022. So this one I don't think is as bad in comparison. But I mean, with how much these stocks have run up into earnings, like you said, over the past few months, they were going to need to really, really have some incredible quarters to do anything to make the stocks go up. And I think they were just kind of, in line or ho-hum. They're kind of like that. Yeah, things are moving along. Things are going basically as expected, I think, in the case of Tesla and Netflix. Do you want to flip over to Tesla real quick and we can go through this one?
Yeah, we can go to Tesla. Tesla's basically like the Netflix. Remember, the bar was set high for these two companies. Tesla, they reported earnings yesterday after the bell. Q2 EPS came in at 91 cents, better than the expectation of 81 cents. Revenue came in at 24.9 billion. Estimate was for 24.51 billion. They start free cash flow came in at 1.01 billion. Estimate was for 2.18 billion. The start of production of Dojo training computers. Cybertruck remains on track for initial period this year. They're focusing on cost reduction and new product development. And what the research firms are doing today, I always like to look at the notes when I get up in the mornings and see what they're thinking. Barclays, they maintain their $260 price target. Bernstein maintains their $150 price target. Wells Fargo maintains their $265 price target. Wedbush ups their price target to $350 from $300. Guggenheim goes to $125 from $112. Truist goes from $254 from $240. Mizuho goes to $330 from $300. And Deutsche Bank goes to $300 from $270. So again, this stock, just like Netflix, ran up. It's up. I think it's up 130% year to date. So again, this pullback was expected. And the Tesla implied one-day move yesterday was 6.48%, plus or minus. So it is moving down to the downside. Nothing expected. And to even relate to Netflix, Aaron, Roku, Warner Brothers, and Para were all moving lower in sympathy with Netflix.
Yeah, I mean, so out of the latest, price targets, let's see. Benzinga Pro will give us a little average here. Try to find it. Oops, not what I wanted to do. Yeah, it seems like the Tesla. I mean, did Tesla give? What were the updates on the Cybertruck?
The only one that the headline that caught most of the wire's attentions, and I tried looking for more, was that the Cybertruck remains on track for the initial period this year. Some of the comments made on the call basically that they expect to use both NVIDIA and Dojo. They're open to licensing full self-driving software and in early discussions with a major OEM. It will increase spending on AI, increased 4680 cell production in Texas by 80% in Q2 over Q1. They continue to see improvement in commodity prices. They will allow transfer of the FSD as part of a one-time amnesty in Q3. They benefited from $150 million to $250 million in the Inflation Reduction Act credits in Q2. They say they will take NVIDIA hardware as fast as they will deliver it to them, and they will have to lower vehicle prices if macro conditions do not remain stable. That's a headline I think is getting a lot of attention, is that they may have to continue to cut prices already, as they did 5 to 6 times already in the US, just because the macro conditions aren't remaining stable. We just saw Ford the other day cutting their prices by at least $10K on all models of the Ford, I believe, F-150. So prices are being cut at Tesla and Ford. General Motors, I'm waiting to hear from them to see what they do when they report what they think with their prices, if they're going to have to continue to cut prices. But basically, it was a better than expected quarter. Remember, the stocks have been up tremendously, 130% year to date, 1 year to date and 6 months. So of course you are going to get a lot of volatility. So I'm not surprised to see Tesla trading down. But again, the bulls are still narrative. You saw those price targets are still going up, and they're still maintaining outperform ratings.
Yeah, and I mean, so Jay Rice in the chat's pointing out the fact that analysts typically, they'll raise price targets when the stocks are going up, and they'll cut price targets when the stocks are going down. So a lot of times they can be kind of, not that helpful in that sense. Although I will say, I think sometimes when they can be helpful is like when you're digesting these, things like earnings and stuff, because they can look at the guidance and stuff like that and have a good sense of, okay, how is this going to impact share price going forward? At least maybe more so than just like any other time the stock is moving up or down a lot. But I agree with that sentiment that the analyst ratings typically aren't that, helpful or meaningful in that sense. Nick, any big news outside of, the big earnings reports that we saw?
Yeah, not really. It's been an earnings kind of reaction. The only one that we've talked about, the Apple, and to allude back to Apple, Aaron, they actually got an upgrade this morning over from Credit Suisse. They raised their target on Apple to 220. I believe they were at 200 based on they think that growth in services remains key to multiple expansion as the business supports 40% plus corporate GM, recurring revenue, and sticky customer relationships. With Apple's push into emerging markets and see 2024 launch of its Vision Pro, we think services opportunity is still under-penetrated over 2 billion device installed base. So they basically raised their price target on traction in emerging markets, positive iPhone read through, and reacceleration in services were basically their theses on why they raised the target to 220. And so we've seen multiple research firms raise their target on Apple, raise their target on NVIDIA over the past few days. So it's not something that we're going to have a slowdown in raising the targets just because Apple's lower today. But we're going to have to really watch the AI news. When Apple reports, they report August 3rd, I believe. So well late into the earnings season. And we're going to have to see what they think on China. Remember, they are moving production. They're in India. They're trying to get into India. Vietnam. So we're going to have to really see the Apple quarter, if it's this better than feared or worse than feared, or how analysts are catalyzing that or are firming this, just because it is very important, because Apple is iPhones. I mean, I don't know, Aaron, are you going to upgrade your iPhone? Are you going for the new upgrade? Because Dan,
I want to.
Wedbush, that's his thesis, is there's a lot of people not upgrading their iPhones. And eventually, once we get into iPhone 14, iPhone 15, we have the iPhone 14, but iPhone 15, the 16, your 10s and 11s and even 12s aren't going to eventually work to the best of their ability. So you're going to eventually have to upgrade. I still know people with iPhone 8 and 9s and 7s. I'm like, what are you doing? Upgrade the iPhone.
Yeah, I want I think it'll be convenient having a USB-C charger for the iPhone. So once that comes out, I think that will be a selling point for a lot of people. And like you said, I think the past couple years, I think there maybe hasn't been that much upgrade happening. So I think eventually, there will be a bunch of people rushing to get, whether it's this one or the next one that comes out. Who knows? I might hold off right on the next one and then wait till like, because I don't know. Sometimes they put out then like the SE versions or kind of like the secondary versions before the year's up. So we'll see. Maybe I'll wait till the next time. My phone provider is having a deal on them, because sometimes they'll do that where they'll do like a good trade-in deal if you trade in your old iPhone.
I was going to say, my friend got the iPhone 14 Pro, I believe. I think he got the iPhone 14 Pro Max. He got it essentially for free for his provider. And I believe his provider was Verizon. He basically traded in I think he had an 11 or 12, and he basically got the iPhone 14 Pro for free as soon as it come out. He ordered it, and he had no troubles at all.
Yeah, I think I did something similar. I remember AT&T was having a great trade-in deal where I traded in like an old, like it was a huge upgrade for me. I forget exactly. I might have gone from an iPhone 8 or something to the 14. It was crazy. It was a big upgrade.
Yeah.
All right. Well, Nick, unless you have any other big headlines you want to chat about, I think this has been a good little recap of the earnings reports that we saw last night and everything else going on in the markets today.
Yeah, I was going to say we have Dow back above 35,000. That's like the first time since, 2022, if my memory serves me correctly. But something we don't normally talk about a lot on this show and a lot of other platforms is commodity prices. Watch commodities, Aaron. Those are getting a little bit of a bid up. I know wheat is higher. They're near the highest levels since like May. We've seen wheat. We've seen copper. We've seen a lot of these commodities just because of Russia, what they're doing with this wheat. They're trying to stop the wheat imports, the grain imports to Ukraine. So we are seeing a little bit of commodity spiking. So just be alarmed, or just be aware that wheat could be spiking, and that could lead to an up in inflation. We're going to have to watch inflation over the next few weeks into the months ahead, just because there was a new Bloomberg report out this morning, basically saying their economists that they polled, and even Reuters had this earlier in the week, that the economists that they pulled in their new survey, economists expect this to be the last rate hike in the cycle, even though a lot of the banks this week, there's a mixed take that I think a few of them think that there's going to be a hike in November. There may be a hike in September. None of them do expect rate cuts until 2024. But, we're in this period that inflation can go the wrong way, or something doesn't crack correctly. We can get another hike or two. And even Fed Chair Powell has alluded to another hike or two, possibly even 3. That's not out of the question. So we're going to have to watch the Fed closely.
Yep. 100%. I think the Fed, a lot of people are questioning. Looks like another hike in the works right now, but it'll be a bigger question of after that. Nick, have you been following this news with the phone providers, the Verizon's, AT&T, these potential lawsuits with the cables and everything?
Yes, I have. And, I think Verizon's like near the lowest level since 2010. AT&T reached its lowest level since 1993 this week. AT&T was actually out with a statement just a few days ago, basically disputing this Wall Street Journal report. And so we haven't really heard anything from Verizon. We really haven't heard anything other else, but basically saying AT&T is denying this report. They aren't agreeing with it at all. They say that they're not going to take the lead levels out of Lake Tahoe. They're not going to take them out just because they don't think they're causing enough harm, or they don't think they're causing harm at all. So AT&T's statement basically reflected that they're against this report, but we're going to have to really watch this just because this could elude and play out. But when Verizon and AT&T both report earnings, we're probably going to get some comments on the report. But the one take is, Aaron, this Wall Street Journal report was issued over a weekend, way in this beginning of July. And we're just hearing about this issue from AT&T and AT&T now. That doesn't sound correctly to me. And that doesn't sound, if the company comes out, I could get, if, a company reports a statement and it's not true, you would come out immediately and deny this. I don't know why they waited so long to come out and issue this statement. So I'm going to try and dig a little deeper, listen in whenever they report earnings to try and get some more information on why they waited so long. And that's the big question investors and traders want to know. Why did they wait so long to come back and issue a statement denying this report? even though this report was out at the beginning of July. I believe the first weekend in July, it was a weekend report, and now all of a sudden we're just hearing from AT&T. That doesn't sound correctly to me. So we're going to have to really watch this story closely. AI, we're going to have to watch. The Fed, we're going to have to watch. Even though it's summertime, we're in earnings season. The summer is not dying down. There's a lot of stuff on each other's plates, especially traders and investors. You got the Fed, you got earnings, you got inflation, you got commodities possibly spiking. You got the jobs market not breaking as everybody thought expected. You still don't have a recession as everybody thought. So we have a lot to digest within the next few weeks and months to come.
Yeah, I mean, it's going to be exciting, Nick. I like whenever we get these kind of busy news cycles in the market because it makes my job easier in terms of just having things to talk about. And also just makes the summer a little bit more exciting because a lot of the times, the summer is going to be a little bit slower than other times of the year. But when you have these different big news stories, it makes it just a little bit more exciting. But Nick, thanks as always, man, for hopping on the show today, for helping us break down the top headlines. Always a pleasure to have you, man.
Thank you. It's always great to be here and to help, navigate the issues, try and break down anything I can. And we'll see you next week.
Awesome. All right, Nick, well, enjoy the rest of your Thursday. Have a good weekend, and we'll chat soon, okay?
You too. Enjoy.
All righty, guys. That was Nick Brown. Please smash the like for Nick. I got to say, I don't know if he's got to be Benzinga's top intern. My favorite intern, at least, is what I can say. But, just absolutely killing it in terms of market coverage, especially for his young age. So please smash the like, subscribe to the channel for more from Nick if you have not already. All right, folks, it is almost 1 p.m. We're going to go ahead and turn it over for the day. We've got Cannabis Insider coming up. The stream should be set for you to be redirected automatically. You do not need to go anywhere. Do not touch those remote controls, clickers, mouses, anything of that nature, because we've got more good content coming your way. Till the next time that I see y'all, which will be next Tuesday, we're going to do another one of those special kaiju conversations. So if you want to learn more about AI, you want to learn more about how AI is going to impact the markets, what's going on, how firms are using AI to trade, make sure to tune in with us. Again, that'll be 11 a.m. on Tuesday here on YouTube, Benzinga's YouTube channel. Best place on YouTube to be. Smash the like. See y'all soon. Till then, peace and love, y'all.
This is Ben